Hello, and welcome back to another episode of the Markets at a Glance series. My name is Rufas Kamau, Markets Analyst at FX Pesa. So, as we all know, we do these on each and every Tuesday. We focus on what's happening in the markets, what's happening in the charts, and try to identify the potential. So, apologies for that. So once you join in, kindly say hi on the right comment section, and this will confirm that everything is working just fine. Awesome. Hi, Karaoke, and welcome to the session. Thank you for your response and taking your time to join in. So we'll dive right into it, see what's happening in the markets. And then once we cover these, hopefully it will create value for everyone joining the space. So another key thing to mention that this is not financial advice. It's not a recommendation to trade. This is purely educational to help you understand these key concepts and build more information in your trading. So hello, Maurice, and welcome. So the chart we are looking at is the US dollar index and how it has been performing over the last couple of days. So last week was majorly bullish for the US dollar index, same for Friday when we had the non-farm payrolls. So we saw the non-farm payrolls job come better than expected. So you were expecting 200K jobs, we saw about 223K jobs. And this was a big thing in the market. There was a lot of negative expectations. A lot of people expecting the job market to slow down in the US, but the recovery is impressive. We have seen levels lower than the pre-pandemic levels. So what this means is that when the US announced a strong jobs report and the wage growth was decelerating, there was overall expectation that the Fed would start to slow down on the rate hike. So this expectation is what drove the dollar sell-off. So we saw the dollar selling off strongly on Friday. Then come Monday, this is yesterday, the continuation of the same, the dollar kept going down before it found a nice spot at 102.65. And then since then, we have seen the dollar start to recover. They has been quite impressive on the dollar. And all this creates a lot of opportunities for trading in the markets. So what we saw in the Euro USD, while the dollar was losing, the Euro was gaining against the dollar. So a very strong recovery here. Yesterday, we saw the Euro break this particular resistance. This resistance was something that we saw on the 30th of December, and then break even higher to a level that we last saw back in June. So this particular level was last seen in the markets in June last year. So the strong movement here was indicative of optimism that the Fed will slow down the rate hikes. And in this case, we'll be seeing the divergence between the ECB and the Fed. So this continued through yesterday, but once we go to this resistance, you can see that the market weakened, and now as the dollar recovers, this trend seems to be changing direction. So the same case is happening on pound USD. So a very strong rally, breaking some very strong resistance level here. So you can all see this particular trend line here. It was broken in a snap. The market kept going up yesterday, and now we are seeing the reversal or the retracement from the prior move here. So it has been a common theme, and some of the trading setups that have appeared in these charts include Australian dollar against the US dollar. So very strong movement here in what looks like an expanding channel, a horn or a round speaker. So the market got to a major resistance level here. If you check the 4-hour chart, you notice that this high coincided with this high and then this high, and the market found resistance here before changing direction. So on the daily chart in the AUD/USD, we saw a high that was last seen around September. The market broke that level and got to another high here that was seen in August. And then since then, we have seen the market changing direction. So today, it seems like the overall trade direction is the reversal of the prior move that we saw on Friday, as well as yesterday on Monday. So this reversal seems promising, creating quite a good number of opportunities. So for those who are monitoring the AUD/USD currency pair, We saw the first resistance. The market retested the resistance again before dropping yesterday in the evening. Today has been a continued theme where the Australian dollar keeps on losing against the US dollar. So they're looking at a potentially very strong dollar, but at the same time, there's a couple of news that we'll be looking at in the economic calendar to understand the overall sentiment and expectation in the market. So personally, I expect this particular pair to drop at least to a level around 0.68248. So once we get here, perhaps we'll be seeing a bounce or even a continuation. So this seems like a key target area. So besides this, if you look at the US 500, this is the S&P 500. It was on a bullish momentum for quite a while before it broke the support levels. So since breaking the support levels, what we are seeing here is a continuation of a trend, perhaps a reversal towards the lower side. So since this break here, this was back in December, we saw the S&P 500 trade sideways. So while we were expecting a Santa Claus rally, somehow it didn't happen. So for 2 straight weeks, the S&P 500 was moving up and down in a range before it eventually broke towards the upper side. So if you extend the range here, you can already see the break happened towards the end of the trading session on Friday. Yesterday, it tested the area before moving up higher. And then today, you can see it has dropped right back into the range. So it's technically a reversal of the prior move. So remember, this was based on expectations of how the Fed might behave as a result of the strong job market and decelerating wage growth. So further down the line, if you look at UK oil, it was experiencing a major drop-off last week before finding some good support here. This was on 4th of January. Then on 5th, retested the same. Then on 6th, did the same before rallying yesterday. Then pulled back, and today, as you can see, the Brent oil started with a downwards movement before gaining some strength, and hopefully these will act as sufficient support for the Brent oil, where the expectation is now that the market will start going up. So remember, there's very strong optimism that oil will start recovering, and this is majorly as a result of the biggest oil importer, that is China, easing COVID-19 restrictions. So there's an expectation that there will be a spike in demand for oil in China, and this is expected to drive prices higher. However, you have to be very careful. Remember, as we approach the end of January, we'll be having the Chinese New Year celebrations, which usually lasts 2 weeks, and the effect can also last in the market for about a month. So in this case, we experience low manufacturing activity in China, and this could dampen the outlook for oil demand in China. However, overall, things are looking juicy in terms of economic growth. So economic activity is getting a boost in the Eurozone, the US, as well as the Chinese economy. So in this case, demand for oil could go up, and this could serve as a major support. So you can already see here from the forward chart, the sharp drop that we experienced here is no longer the case. So the market started moving sideways for making a sharp drive higher, then pull back. And if you check the last 4 hours, it's evident enough that we are getting some good support, good entry by buyers. So there's a good chance we'll be seeing oil markets start to recover and push back towards the higher direction. So as for gold, this is a very interesting setup. It's on the 15 minutes chart, but before we get to that, let's look at the forward chart. So the forward chart is very clear. We are seeing a very strong momentum in gold since October last year. So a very sharp rise, some pullbacks here and there. So keeps getting pullbacks, but overall, the market has remained extremely strong. So we expect gold to continue along this trajectory. So now, as you can see, if you follow this pattern closely, you'll notice that gold is now breaking higher highs, breaking the upper trend line. So there's a good chance that gold has found resistance on these overbought levels and might pull back for a while before continuing up higher. So on a smaller time frame, in the 15 minutes chart, we have our first flag of the year on the gold pattern. So the flag is currently denotes usually a continuation pattern. Sometimes it's a reversal. So it's hard to tell until the market makes a very strong break. So since last week, you can see the strong acceleration in gold on Friday. When the dollar was weakening, gold was strengthening. Yesterday was a sideways momentum, which formed the basis of the flag here. Then today, you can see the market has been forming higher lows. So this is on the 15-minute chart. So from the lowest part of the day, these are the low and these are the low. It seems like the lows are getting higher and the highs are getting higher, which creates a potential for this breakout. So we already had a breakout here, but the impulse is not that convincing. So there's a good chance we might be seeing gold continue to break higher. On the other hand, if you consider what has been happening in the dollar today, the dollar has been strengthening against other currencies. Also, it's also strengthening against gold. So if this particular trend continues, then this might be a forced break in preparation for a break in the opposite direction. So there is a good chance that we'll be seeing gold dropping past the lower trend line. And if it breaks this, then it could move down even further. So it's a matter of monitoring the pattern and looking at the price action, looking for potential trade direction to identify a trading opportunity. So Bitcoin has been moving sideways for the last couple of weeks. This is 3 weeks where Bitcoin was just moving sideways. Nothing much was happening up until Friday during the NFP when we saw gold rally all the way to the resistance. Then yesterday broke the resistance, went all the way up, formed a high, pulled back, and now seems to be trading sideways for the day. So since the opening of the day today, you can see it's almost a sideways momentum. So we will be following up on the oncoming news in the market, try and identify a trading opportunity. So as for the US Tech 100, we know Tesla had a good rally this week, and this is also a big contributor of the movement of the Nasdaq. So we saw a break here on Friday. Yesterday, a very strong acceleration before pulling back. So the next news announcement that you're expecting for the day would be very instrumental in causing the next direction of the markets, especially the US Tech 100, or what we call the Nasdaq 100 index. So Audi JPY, you can see making some good swings. So we could be looking for a potential trading opportunity in this particular resistance level. So notice that this market was moving in a bearish channel. We made a very strong impulse momentum before recovering, and then another impulse in what looks like a W-shaped pattern, a double bottom, which is often taken as a reversal pattern. We are expecting the prices to move higher. However, since breaking this neckline here, the market didn't rally for long, got to the upper trend line here. The upper trend line was respected very well. So now it seems like the trend is now taking on a new direction, and perhaps we'll be seeing some further downside momentum in continuation of the original move. So there's a good chance that we'll be seeing the Audi JPY continue moving down lower. So in the news, what we saw earlier this morning is the inflation rate in Tokyo hitting 4% for the first time since 1984. So this is a big celebration in Japan. Remember, the economy has been battering inflation for the last 20 years. And now they are getting hopeful that their strategies or the monetary policies have been working. And now they are finally getting positive inflation. So with this, it means that the Bank of Japan is now approaching an area or region in terms of monetary policy where they have hit their goal or their target, and potentially they will start changing the monetary policy to address other issues besides inflation. So remember last year when we were trading USD JPY, it was majorly bullish as a result of the huge divergence between the Bank of Japan and the Fed. So right now, we are seeing the Bank of Japan potentially changing tactics. So what we have been seeing is a lot of QE or quantitative easing in Japan. And at the same time, we have seen yield curve control, which was recently expanded to cover plus or minus 0.5% rates for the 10-year bond. So with these key changes happening at some point, we will see the Bank of Japan begin to tighten. So in preparation of this, remember the markets are always forward-looking. So there's a good chance we start seeing the Japanese yen start to strengthen in the market in preparation for the monetary tightening phase. So in this case, it might be a good idea to look for short-selling positions in Audi JPY, or in simple terms, look for positions where you are buying the Japanese yen. So USD-CNH, this is the Chinese currency. A quick one for everyone who is attending this particular session. What is the name of the Chinese currency? You can type that in the live comment section. So what we are seeing here is a very sharp drop in the US dollar against the Chinese currency. This was followed by the NFP, the market dropping, and then yesterday market breaking the lower trend line, going all the way down and forming this particular support area here. So from this support area, there was a very strong reversal pattern. You can see the green pin bar here, indicating a rejection of lower prices, and it was a signal to go long. So for any trader that went wrong here, if they set their stop loss too tight, close to this bottom, then this stop loss was hit in the confirmation phase. So the market went back to retest the area, triggered some stops here, grabbed some liquidity, and now there's a very strong case that the market will be moving back upwards. So with this trading setup, there's a good chance we'll be seeing the US dollar now recover against the Chinese yuan. So potentially moving towards the upper trend line. Also, the previous low here would be a nice indicator of a target area of 6.8521. So USD JPY, as you can see, let me show you from the forward chart, bearish momentum, market going down. So in the previous reading, we're expecting the market to drop all the way down to the lower trend line. This didn't happen. Market pulled back up towards the upper trend line before moving down lower. So what we are seeing here is a market that is losing momentum. So this momentum of USD JPY getting low and low, newer and newer lows seems to be getting exploited. So as a seems to be getting exhausted. And now the market is continuously testing the upper trend line. So in the previous test, and this was last week, managed to break briefly before dropping, but the drop didn't get all the way to the lower trend line or even the previous low. And now we are seeing a potential reversal here. So there is a good chance we'll be seeing the US dollar now start to rally against the Japanese yen. So if you look at Friday last week and then yesterday, an attempt here, today seems very positive that we'll be testing yesterday's high and perhaps moving even higher towards the Friday's high. So US30 has been the most resilient index compared to the other top indices in the US. So in this case, you can already see what has been happening. I'll use a higher time frame in this case. This is the daily chart. So last year was entirely bearish, the entire year. Then towards the end of the year, we saw this strong rally here in September through November to December. Then here we faced a very strong resistance. So the market was unable to break this area of 34,300, pulled back down, and now you can see the momentum where the market is trying to identify a direction. So a lot of sideways momentum before breaking higher on Friday. Yesterday even higher before pulling back and right back into the channel here. Similar with what we saw in the US 500. So as for USD card, similar case, very strong bearish momentum. You can already see what was happening last week, pull back, followed by some further downside, indicating the strength of the Canadian dollar. So there was mixed reactions in these, mainly as a result of the Canadian economy also printing better jobs than expected. So it's important to note the key price levels in USD card. So from the 1 hour chart, this was a major resistance and a major support somewhere around here. So we already broke the support, and now that the market is attempting to push back, there's a good chance that we'll be retesting this major support level. So from this support, market breaks, goes all the way down, hits another support, and now on this reversal, there's a good chance we will be seeing the US dollar rally against the Canadian dollar towards the 1.34793 target. However, on the contrary, if this doesn't happen, then another retest towards the support. This would push us right back to the 1.33571 area. So if you have any comments or questions, feel free to type them in the comment section, and I'll be responding to those questions right away. So, hello Charles, and welcome to the session. There's definitely a bullish case for JPY, especially after Kuroda finishes his term. Hopefully, the next proposed governor is a hawkish one. Yes, there's a good chance that after achieving that target, we will be seeing the Japanese yen start to strengthen against other currencies, and it might be in order to look for opportunities in that particular direction. So now that we have covered some major currencies, I know you are all looking to get some highlights on some of the currencies that you are tracking. And now that's done, I like to now focus on the economic calendar. So in the economic calendar, there's quite a lot that has been happening. So last week, I can do a quick skip here to last week. Then we look at Friday, look at the jobs numbers. So non-farm employment change 223K jobs created in December versus an expectation of 200K. So this was a good performance, and unemployment rate dropped to 3.5%, despite analysts estimating the unemployment rate rise to 3.7%. So this was a big surprise. The other big surprise in Canada, we expected that the Canadian economy would create 5.5K jobs in December, but there was a big contrast where the economy created 104K jobs in December. So unemployment rate did not rise to 5.2%. Instead, it dropped to 5.0%, indicating very strong resilience in the job market in Canada. So average hourly earnings is a key data point that the Fed is tracking. So in this case, they were not rising as much as expected, which was 0.4%. They decelerated to 0.3%, meaning that the Fed's policies are having the desired effect in the economy. And if this keeps on happening, then the Fed might have to slow down the rate hikes. And as they said in the last meeting, that they are looking to approach the area between 5% and 5.4%, keep the rates restrictive enough in order to push the inflation rate down towards the 2% target rate. So fast forward now this week. Early on Monday, we saw unemployment rate in Switzerland drop from 2.0% to 1.9%. This was big, and also in the Eurozone, we saw unemployment rate retain the same level at 6.5%. So now, today, the most important news for the day is the Fed Chair Powell's speech. So Jerome Powell will be issuing a speech at 5 p.m. So in this speech, of course, he'll be responding to the current economic data we have seen. One of them will be the jobs report. So he will be talking about the jobs report, how the wages are decelerated, and how the Fed is looking to respond to that. So in addition to that, he will be talking about the ISM services PMI, which came in at 6 p.m. Last Friday. You can see the services were weakening, and also factory orders were also weakening. So he'll be talking about these and how the Fed is looking to respond to that. So in this case, investors will be following closely to see whether the chair remains hawkish, as he has been for the last 1 year. And if he changes the tone to something dovish, dovish would mean making a much smaller rate hike, or even retaining the interest rates at the same level, then that would cause the dollar to weaken further and stocks to rally, as well as the indices. But then, if it remains hawkish and maintains the same messaging that is looking to keep hiking rates for the quarter or even in the next quarter, then in that case, we'll be looking at a much stronger dollar and a weaker stock market. So we'll be looking at the S&P 500, the Nasdaq, and the Dow Jones weakening. On the other hand, the dollar strengthening. So it's the major news for the day today. And as we move on to tomorrow, we'll be having the Australian CPI or inflation data. Previously, it was 6.9%. And in December, we're expecting that this inflation number had spiked to 7.2%. So if this changes to a smaller number, especially lower than 6.9%, then that will be very positive for the Australian dollar. And the most important news for the week will be the US CPI or inflation data. So there's a common term that we've been saying that the CPI is the new NFP. And this basically means news announcements in the past, especially in the last 10 years, what we have been seeing is that the markets were more responsive to the non-farm payrolls because it was the major data influencing Fed decisions. But now, the major problem facing the US economy right now is inflation. So the inflation data is very important in the US market. So whenever this information is announced, it causes a lot of movement. So it basically makes a big move in the market compared to the NFP release. So the biggest news that our investors are waiting for this week is the US CPI. So in the previous reading, we saw inflation drop 7.1%. Just to give you a quick highlight, we saw the inflation peak at around 9.1%. And since then, you can see it's a consecutive drop for 2, 3, 4, 5 straight months. So for 5 straight months, the US inflation rate has been dropping. In the previous reading, dropped 7.5% to 7.1%. And now we expect even another drop towards 6.5%. So if this happens, then it might cause a mixed reaction, and it will be a follow-up on what Jerome Powell talks about today. So if he says that the market, that they will keep on hiking rates even if inflation drops to 6.5%, then we follow his directions and look for trading opportunities in that order. However, if inflation remains persistent, let's say close to 7.1%, then we'll be expecting the Fed to get more aggressive, and that would mean a much stronger dollar with the equities. But then, if inflation drops to 6.5% or even below, then the dollar could start weakening and investors could start pricing in a bottom where the Fed would be forced to pivot and now start preparing for rate cuts, perhaps in the second half of the year. So that's it for today. In terms of other news market, we'll be looking at the GBP. This is the gross domestic product in the UK. This will be happening on Friday at 10 a.m. Then later, towards the end of the week, we'll be looking at the preliminary UOM consumer sentiment. This is a survey that is done by the University of Michigan, and it basically focuses on consumers. And when consumers respond, they basically respond depending on their personal outlook. So in this case, it's basically a measure of consumer spending outlook. So if you are doing well, pocket-wise, your business is doing well, your business with your employer is doing well, you are getting your salary on time, you're getting increments, and then you then give a much positive consumer sentiment response. However, if things are going bad, you are taking on more debt, interest rates are going higher, then the consumer sentiment report you give tends to be negative. So we'll be following on this closely to see how the Americans think about the economy, and perhaps this will also have some effect in the financial markets. So if you have any questions, feel free to ask or type any suggestions or commentary. It's also welcome, and I'll be responding to that right away. So in summary, for today, Euro USD, we expect the reversal to continue, but much more volatility to happen at 5 p.m., especially during the Fed Chair Jerome Powell's speech. So same case as pound USD. Pound USD seems to be strongly bearish, so we could see some further downside momentum, but this is pegged on the speech. Same case as the dollar index. The US 500, as you can see, right back into the range. So there's a good chance if he remains hawkish, then it will be driving further down towards the previous low or the previous support in the range. UK oil seems to be quite resilient this week. So we could be seeing some form of reversal of this particular move that we saw last week. So there's a good chance we'll be seeing some further upside. Gold, if the Fed chair remains very hawkish, then we'll be seeing some further downside. If it's dovish, then a breakout of the flag towards the upper side, perhaps to the next resistance. So the next resistance is perhaps a little bit higher. So this was a major resistance, as you can see. It was marked once and then twice. Gold hasn't changed direction from here, has been quite idle, playing around this area of 1876. So a break above this could also see us rally towards the 1900 level. So 1900 is not very far off. It's a very psychological number. So it usually works very well as a target. So if gold breaks this, then 1900 could be a nice target. But then if it doesn't break, then the bottom of the flag would be a very simple and logical target around 1825. So 1900 or 1825 seems to be the longer term targets. But then in the short run, we're also looking at inside the flag. So a simple drop towards the 100 of the flag would be a nice target. So good question from Esther. Hi Rufas, how can one trade comic scandal move on gold or anticipate the move? So anticipating the move is basically watching the prices. I would say it's pretty simple. Let's say you're trading on the 1 hour chart. Let me remove all this. So what we are seeing here is pretty simple. On the 50-minute chart, a lot of sideways momentum. Usually, whenever this happens, it basically indicates that the market is trading sideways. There's nothing much happening in the markets. We're expecting a direction, especially as a result of the news. So with all the news, the market could keep on trading this way. So now, during Jerome Powell's speech, we'll be expecting either hawkish or dovish remarks. If it's hawkish, then a break. So breakouts tend to have much stronger candles. So not weak candles. So in this case, if we see a strong spike towards one direction, then perhaps that will be the direction. Sometimes there is a fake out, it's cost of the trading breakout. But then if you get it right, then the outcome can be very good for you. So the idea is to look for a candlestick that breaks either of the trend line convincingly, not slightly, but strongly. So a very strong green candlestick towards the upper side, breaking the upper trend line would be a signal to go long. A very strong red candlestick breaking the lower trend line would be a signal to go short. So all you have to do is to take your time, keep monitoring the charts, and once you identify your opportunity, then you definitely go for it. So thank you very much, guys. Thank you for your time and participation. I always appreciate seeing you in these sessions. Your questions, your commentary is always good. And I hope to see you on the next session. So a key announcement, very soon we'll be doing live market commentary, and this will be happening daily. It will be happening late in the morning at around 11 a.m. And these will coincide with the London market open. So on these sessions, we'll be covering what's happening in the markets today. We'll be looking at the news to focus on today. And at the same time, we'll be looking at the key price levels. So hopefully this will add value to you guys. It will help you identify trading opportunities. And once we get this done and get it going, hopefully everyone will get to benefit from this. So if you have other friends that usually join these sessions, remind them that we'll be doing this series very soon, perhaps from next week. And once we get this started, this will be an year of making profits. So thank you, Esther. Thank you, everyone. See you on the next session.